Hi, I'm Steve Bigger, Director of Equity Research at S&P Capital IQ. Welcome to this week's edition of Equity Analyst Forum. With me today on Equity Analyst Forum is Paper and Forest Products Analyst Stuart Benway. Stuart, welcome to the program.
Thank you.
So this week's focus stock of the week is Louisiana-Pacific. Can you tell us a bit about the company?
Yes, Louisiana-Pacific is the largest supplier of oriented strand board in the country. It also produces wood siding and engineered wood products. These products are used primarily in new residential construction, and the company has annual sales of about $1.7 billion. This year we expect sales to reach about $2.1 billion. And the majority of Louisiana-Pacific sales are in the United States and Canada, but it does have a growing business in South America, in Chile and Brazil. The stock has a market capitalization of $2.2 billion.
So oriented strand board, that seems like a new term. Can you expand on that?
Well, the product's been around for a while, but it is a product that's very similar to plywood. It's made from wood chips that are pressed together under heat and high pressure to make a product that is very similar to plywood. However, it is cheaper to produce than plywood, and it has it's higher quality in terms of it's easier to, it warps less, and it's easier to drive nails through. It's used extensively in new construction, especially for flooring underlayment and sheathing around the outside of the house. LPX has some of the lowest cost OSB facilities in the country, and it has a market share of about 25%.
So how about demand? How's that been for the company?
Demand has been strong lately, due primarily to the recovery in the housing market. Sales volume of OSB in the fourth quarter were up 16%, and in the first quarter it was up 12%. The siding business has also been strong domestically, with siding volume up 19% in the fourth quarter and 21% in the first quarter. And management expects this rising volume trend to continue, and as a result is in the process of restarting one of its OSB plants in the south. And we expect this plant to be fully up and running by the end of this year.
How about the stock price? What do you like at these levels?
Well, Louisiana-Pacific went through a long period of losses as the housing market went through a very long and extended downturn. But we think the conditions in the company's markets are clearly improving, and the company is back on a track to profitability. I think the company can generate strong margins in a period of rising demand and prices. And the company's results are beginning to show that. In the first quarter, earnings reached 41 cents per share, up from a loss of 6 cents in the prior year, on a sales gain of almost 50%. And the major factor driving these higher earnings at LPX is the stronger housing market, as I just mentioned. Housing starts were under 600,000 units in 2009 through 2011, but they have been much stronger recently. And in March of this year, housing starts exceeded 1 million units for the first time in 5 years. And starts in May were up nearly 7%, despite a very wet period. And our economists at S&P look for starts to continue to strengthen, with starts up 29% in 2013 expected, and a further gain of 23% projected for 2014. And I expect this improvement to lead to growing demand for oriented strand board and siding. I also look for prices to rebound after the recent pullback. The summer and fall months are usually the highest months for construction, housing construction, and that should lead to higher prices for building materials. And we also think that LPX will benefit from the higher output that I just mentioned. This new plant in Alabama should expand the company's capacity by about 20% when it's fully operational. And lastly is the remodeling business. I expect that to continue to improve, which should boost demand, especially for siding and to a lesser extent OSB.
So how about valuation? What are you using to value this company, and what's your target price?
We're using my discounted cash flow model to value the company. Target price is $23, which is about 40% upside from current levels. The strong cash flows that I see are going to be coming from what I just mentioned, is primarily the higher earnings, as we see quite a bit higher earnings both this year and next and into the future. But also, the company had expanded its capacity quite a bit during strong periods, so we see very little need for new capacity, and capital expenditures should remain low for the next couple of years.
How about risks? What would you highlight there?
Well, since LPX is highly dependent on the housing market, the biggest risk is the lack of further recovery in the housing market. Housing starts and remodeling, a big driver of the company's business, and so if that doesn't recover as I expect, then there's some risk to my estimates. And also pricing, Orient strand board is a commodity, and pricing can vary quite a bit, and I'm looking for higher prices from here. And if that doesn't materialize, then it could also be some risk to the stock.
Great. Thanks, Stuart.
Thank you.
And that's been this week's edition of Equity Analyst Forum. We'll see you again next week.